Afternoon, Cyberland. Thank you for attending Revelwood's webinar here on September 30th, TM1 Beyond Traditional Finance. We are going to be covering real-world use cases for TM1 outside of the Office of Finance, and we thank you very much for your attendance. My name is Jason Mutz. I am Sales Executive for Revelwood for the Midwest and Great Lakes. Joining me on this line and your chief presenter will be Ken Wolf, the CEO of Revelwood. Just a bit of background on myself and Ken. We've been in the business partner space for business analytics with IBM for a very long time. Ken, most notably, is the co-founder of Revelwood, having over 25 years experience at organizations optimizing analytics and performance management, and he also does happen to be a certified public accountant. Today we are going to be doing a brief introduction, a little bit about Revelwood. We're going to be reviewing these various TM1 use cases that are beyond the traditional FP&A realm. We are going to be having a Q&A session at the end, and then we're going to be talking about next steps for follow-up and for further evaluation and such. Just a note about Q&A, we are going to be compiling some questions, so if you have anything to submit, feel free to enter it into the Q&A box noted on your webinar portal, I guess, and we'll be able to see that. You won't be able to see other people's questions, but you will be able to see your own that you're submitted, so feel free to submit those at any time during the presentation. A bit about Revelwood. Revelwood itself has been in the TM1 market and business analytics market as an IBM Premier Business Partner for over 20 years. We are highly regarded as a top-tier expert in the Cognos TM1 suite. We actually have award-winning proprietary solutions surrounding the Cognos suite and 3 different practice areas, including financial performance management, sales performance management, and predictive and customer analytics and business intelligence solutions. Our motto is we make heroes of our clients, and every new client that we bring on, we have that intention and work everything we can to make heroes of them as well. A bit about the industry coverage that we do cover. Revelwood, being in business as long as we have, literally has hundreds of customers and hundreds of implementations of TM1 and other IBM solutions. So our breadth of knowledge and industry base is really across the entire spectrum. As you can see from the slide, there really is not a single industry that we do not touch or do not have experience in, and all of this comes from our very long range and wide breadth of industry experience. I am going to throw it over to Ken Wolf to begin the TM1 use case review and get into the content of our presentation. And as I said before, if you have any questions along the way, feel free to submit them in the box to your right, and we'll be sure to address those at the end. Ken, go ahead.
Thank you, Jason, and hello, everyone. I'm very excited to be presenting this. What I'm going to be doing is really taking you through a variety of different use cases of TM1 that go beyond traditional finance, and I'll define what that means in just a minute or so. But I want to point out this is just a selection of the many types of uses of TM1 that you can deploy beyond traditional finance. And if you give us the feedback after this webinar that this was valuable to you and it was helpful, maybe this could become the first in a series. And we will have more information about other types of use cases, and we will be expanding that library of information that's available. And so feedback is going to be very important, and as we reach out to you, if you can give us that feedback on what you thought today, that will help us a lot in terms of how we proceed in the future. So a couple of points and caveats before I get started. We're going to be covering these use cases. This is at a high level where I'm not diving into detail. If I did that, we would maybe cover 1 or 2 use cases, and that would be it. Instead, I'll be covering somewhere around 10 or 12. And to do that, they each have to be high level, but it's high level enough, I think, to be able to give you a sense of the creative use of TM1 in that type of solution. So full disclosure, I did not build these myself. Actually, no one individual built all of these solutions. It was across the entire sort of Revelwood organization and our clients that we work with. So, I only have so much knowledge of each of these examples, and our experts here at Revelwood can help elaborate further if there's more that you're interested in. So if you want to learn more about any particular use case, please get in touch with us, and we can find the right experts that can take you deeper perhaps to understand better what the solution was all about and how it worked. So the purpose of this is to get you thinking. It's to inspire ideas of how you might be able to use TM1 within your own organizations. It's not meant to be specific prescribed solutions exactly for you. You'll be surprised how much you can actually learn from other industries and other companies, and I think you'll get that exposure here today. So think of it as that. If you can think of it that way, maybe there's not a specific solution that's going to be relevant to you, but you'll get ideas and thoughts about how you might apply this within your organization. And finally, two other caveats. One is I will not be mentioning the names of any companies, any of our clients. We keep client confidentiality we take that very seriously. Names won't be mentioned, so I'll just be talking about a such and such client in such and such an industry. And finally, they're going to all vary in length. So some will be pretty brief, others we might dive into a little bit deeper. So let's get into it, shall we? Sorry, before we get into it, just the areas that we're covering, forgot about that. This gives you a sense of the functional coverage that we're going to be, that actually Revelwood's overall functional coverage. So you can see that we've developed TM1 solutions beyond just the finance box or hexagon there, and all of these other kinds of departments, operations, throughout the operations of organizations. We work with marketing, we've worked with sales, human resources, etc. And you will see today pretty much all of these except perhaps accounting and tax covered in today's discussion. And then from an industry perspective, Jason gave you a sort of a snapshot of overall industry coverage for Revelwood. Today's use cases will be in these industries. So you can see it's a variety. We didn't want to focus in one particular area. So and I'll go through these as we go through one by one, and I'll kind of explain a little bit about the industry and the company as we go. So before we jump into our first use case, let's define what we mean by traditional finance, or what we call FP&A, right? Financial planning and analysis. So when you think about traditional FP&A, just to define terms here, when we think about that, we're talking about your typical planning cycles, so budgeting, forecasting, estimating, whatever throughout the year, and perhaps actual reporting as well. In fact, in most cases, you're pulling in actuals monthly from an ERP or GL source, and then that's combining with your plan, your different variety of plans. And that's sort of the traditional FP&A. Your data is probably fed from that GL. Maybe you have some information coming in from HR, maybe from a fixed asset system. And you have sort of the full trial balance built into that model. You might have intelligence and logic that considers differences between periodic balances and ending balances and historical balances. Also has full logic to handle foreign currency translation, and the logic to understand balance sheet versus income statement versus cash flow, produce those types of financial statements. That is sort of what we consider typical FP&A. Maybe there's an allocations module in there as well, and you can produce a whole myriad of reports, variance analysis with commentary, things like that. So that's what we're sort of defining as the traditional FP&A solution, and it's represented in this diagram here by the blue boxes, which are typical sort of modules: capital planning, general expense planning, staff planning, compensation, all that might feed into a sort of core finance model, and then allow you to do your reporting and analysis and all that kind of stuff. So we're considering that traditional FP&A. Revenue planning is also traditional. I mean, it's really part of a typical FP&A process. However, because it differs so significantly from one industry to another, and even from one company to another within an industry it can. It's not prescribed. It's not something that everybody does, and so we're going to touch on some revenue planning solutions today. And they're, the way we're going to approach them is that they impact, really they're not direct revenue planning per se, but they impact revenue planning. And the reason we're covering them is because they probably serve another more primary purpose. Or there's just something very interesting about how they're constructed that is worth sharing with you. So we're not really focused on that. We're trying to get outside of everything on this slide, but there will be points where we touch on revenue, as you'll see, and that's okay because that can be very specialized and very, very creative as well. So before I leave this slide, I just want to mention that this solution that you're looking at, this set of modules feeding into this sort of core finance FP&A traditional application is actually manifested at Revelwood through something we call our BPM suite, or Business Performance Management Suite, that we've had for nearly a decade. We've got over 100 clients of ours that are using the BPM suite and have used it to roll out a traditional FP&A solution with best practices and standardization and all of that kind of stuff. So if you're interested in learning more about that, you can ask us about that, but the rest of today is not about that. Okay, so let's start peeling back the onion behind the financial layer and get into some of the operational information, operational layer behind that, see where we go. Okay. First use case is around incentive compensation, and it's in the hospitality industry. So the client we're talking about here is a very large hotel chain that has many, many properties, and the number's in the thousands, 250 or so of which are owned or managed by the corporate entity. So they manage or own about 250 of their own properties. And the business problem that they were faced with is that they had a need to calculate. They needed a more efficient way, really, because they were always doing this, but they needed a much more efficient way to calculate and pay bonuses by sales rep. And I'm using the term bonuses because in a moment I'll describe exactly how their compensation works. It's not quite commissions. So they have, in essence, sales reps at all of their properties, and these sales reps are responsible for selling, banquet and catering is one area, group sales is another area, transient sales, which we consider sort of individual room sales, is another area. So they fall into these different departments, and all of those, we'll collectively call them sales personnel, and they're all on a special kind of comp plan. And that comp plan is driven based on metrics within the organization, which I'll cover in just a moment. So they needed a solution that allowed them to calculate incentive comp across reps, across segments, across properties. So their model is by property, which is each hotel location, by segment or department, which I was just referring to, banquet, catering, et cetera, and by sales rep, but of course by time and those kinds of things as well. So the way the comp plan works is it's a bonus calc, and it's based on a series of metrics. And for each metric, the bonus is calculated in terms of actuals. So the actual metric result as a percent of the goal, and then that's multiplied by the rep's base salary. So those actuals are coming into the system monthly, and those bonuses are being paid quarterly. And that's essentially how the plan works. So your bonus is based on percent of goal, actual to goal, times your base salary. So the kinds of things that they're measuring, the kind of metrics that feed into the system are certainly not just your typical financial metrics. Things like number of room nights, the associated food and beverage to those rooms, group room revenue, catering revenue, which includes the room itself, the food, the resources, like when you have to order like a overhead projector and screens and other equipment and things like that. Even results of customer satisfaction surveys and new business development coming from the sales rep. So those are the kinds of metrics that are coming in. And the model also includes a submission and approval process. So there's a bit of a workflow going on within this solution, and it uses rule-based security. So we take TM1 security, we apply rules to that allow submissions and approvals, so that enables workflow and to be able to sort of turn on and off locks and things like that. So it's sort of a basic level with some basic security of that workflow process. The end result of all this, in terms of the result, it then goes over to payroll so that it can actually get incorporated into payroll, so the sales reps can get paid. But as you can see here from the benefits, they achieve process efficiencies, reduction of errors, improved visibility and analytics into this information. So that really covers sort of that case, that use case. Before I go on, though, I want to mention that IBM also has an incentive compensation management solution that's completely outside of TM1. It's a separate product entirely. It's called Cognos ICM. It's a very comprehensive solution which has much more comprehensive workflow and reporting and capabilities that go well beyond what I've described here. We highly recommend that solution, or at least looking at that solution, if incentive comp or commission calculations or sales performance management is something that you're interested in. Revelwood has a practice in that space with the Cognos ICM product, so we do support that, and we have clients who use it. So you can talk to us if you're interested in learning more about that. It's not always the right fit, especially maybe in situations where you're paying people infrequently, right? For example, if your bonus calculation is complex, but it's really only once a year, then the ICM solution might be overkill, and a TM1 solution might be more appropriate. If you have small sales forces or small teams of people that you're trying to pay incentive comp on, which is not the case here with this client, but if you did, that might be like well under 100 kind of thing, maybe under 50 people. And if you're already well invested in TM1 and you want to leverage that investment further, that might be a reason to be using TM1. But we highly recommend looking at the Cognos ICM solution. We can help you look at the differences between the two and where one might be more appropriate than the other. Okay, moving on to the next use case. Airline. So this is an airline client of ours. I don't have to describe to you very much what an airline is. I think we all know. And this use case is actually fairly straightforward. It's what we call operational analytics. And so this is completely outside of finance. They have a need to analyze flight metrics. So they have this flight reporting model in TM1. It has both summary and detail cubes. The summary cube looks at metrics by equipment type, so what type of plane is it, by origin, destination, and time period, and the time is in months. So that's a more high-level summary cube. So examples of metrics would be like average seat miles or revenue passenger mile, which is essentially the number of paying passengers times the distance in mileage. So those would be a couple of examples of summary-level metrics. The detail cube is interesting because that gets down a little deeper. It goes by service type, which might be like a charter flight or something like that. So there are different kinds of service flights. By haul length, so is it a short haul, medium haul, long haul length, down to the flight number, the equipment type, the origin, the destination, and the time period is by day, every day of the year, and there's another dimension which is day of the week. And once they incorporate all of that, they can do all sorts of interesting analytics and metrics on their data. The metrics at the detail cube level go deeper than what I talked about. They still have average seat miles, but they also have, for example, something called A14. Unless you are working for an airline, you probably don't know what A14 is. That is a metric which is whether or not the flight arrived within 14 minutes of its ETA, which apparently is an airline industry standard. So next time you're in an airport, you can go up to the gate agent and say, "Hey, are we gonna be making our A14 today?" And they'll think you're in the industry. They also have D0, which is whether or not the flight departed on or before the scheduled time, and some other metrics as well. End result of this, now they're able to track these critical metrics for decision making. They can quickly identify problem areas when they start to see that. So they have all sorts of trending reports and that kind of stuff. They have, they have daily information. They can spot things quickly. And this also supports, this has some of the data that supports the profitability analysis for flights and supports some of the planning process. Okay. Next use case. This is in the oil and gas industry, the energy space, right? So this customer owns and operates what we call midstream energy, the midstream energy infrastructure, which is really getting various types of petroleum products, oil, crude oil, natural gas liquids, things like that, from one place to another. So, most of the time we think of from the source or from sourcing location through pipelines to destination locations, and I'll elaborate on that a little bit as I get into the models. So they're providing all the logistics services for managing the transportation and storage of these different types of petroleum products. They own an extensive network of gathering assets, which is where we gather I'll call it oil. I'm going to use the term oil from this point forward, but it includes different types of natural gases and things like that as well. Where they gather the oil, where they transport the oil through pipelines, and then reaching terminals, so that's called terminaling, and then the storage of the oil as well. So then it could be then transported appropriately more locally to gas stations and things like that and other places it has to go. So they're in major oil and gas producing basins throughout the United States and transportation corridors through the U.S. and Canada and major market hubs. And that'll become a little bit clearer in a moment. So in a nutshell, they receive product from places like a port or a refining oil field, transport that through the pipelines, and store them. We will have a few use cases today on this company, and it'll be helpful to see how that might apply to your own type of organization. So we're going to start with pipeline movement. So that's the physical movement of the oil through these pipelines. So for that, again, as I said before, so you've got these pipelines, and the oil is coming from either maybe oil fields or a port location if it's coming from an international location off the ship, and then it's sort of gathered and fed into the pipeline, and then transported to some storage terminal facility. And in a single pipeline, each pipeline is carrying a different grade of oil because there are different oil grades. And so you might have multiple customers whose oil is being transported through this pipeline. Remember, their customers are the oil companies, the oil and gas companies. So you've got hundreds of these pipelines. And the business problem was that they needed to accurately project the flow of oil and gas, and this is called movements, to support customer analytics and revenue forecasting. So they have two key metrics in the solution. Volume, which is barrels per day, and revenue dollars. Those are basically the two primary metrics that are in here. And their cube model is by pipeline. So a pipeline is really made up of individual pipes, kind of like you saw in that picture a moment ago, that collectively make up a pipeline, which is then part of a regional system, which then goes into sort of total, all pipelines, throughout North America. The model is also by type or grade of oil, of petroleum, by customer, and by month. So the pipeline, so as an example, a pipeline manager might forecast 50,000 barrels per day of oil of a certain type from a port in Los Angeles to a terminal in Sacramento. And that would be, again, by oil grade. And that's called a movement. And it's captured by the origination and the destination point. So then the model also includes things like tariff rates, which are essentially the price of the oil, and the volumes that are entered. And it's tracking aggregate and calculating aggregate movement of these volumes, which then drives revenue calculations. And they can do all sorts of things like adjusting for inflation and do overrides and fine-tune their forecast and things like that. So that's essentially what the model's doing, but it's really the interesting part has to do with the volume tracking and tracking these flows, and then they sort of allocate a movement or flow of a certain crude oil type across the different customers that are that are having their oil transported across that pipeline. Benefits, accurate forecasting of volumes and revenue, and analytics by pipeline, movement, and customer. And also capacity monitoring to a certain extent, because we've got to make sure that our projected volumes of oil don't exceed our pipeline capacity limits. So there's an element of capacity planning going on there as well. Let's take the true capacity planning to the next level. And now we're same company, but now we're talking about terminal storage. So this is a picture of what a typical terminal might look like. You can see there transportation. You might be able to see pipelines coming in if you look carefully enough. You can see storage tanks, and you can see shipments, boats, and there's also near rail lines as well. So this is a key hub where oil is coming in from the pipelines, being stored at the terminal, and then at some point being transported by train, by truck, whatever, maybe going onto a boat somewhere, a ship. So with this particular problem, their issue is their need to be able to, let me advance the slide, to be able to monitor their contracted storage requirements relative to their capacity limits. So they have contracts with their customers to store their oil and gas in these tanks. And so part of it is capacity monitoring, and part of it is revenue optimization. So they have this sort of tiered cube model, and essentially what we're trying to do is make sure, as the pipeline is flowing into the terminals, that we have enough storage capacity and that we can analyze tank utilization and renewals. So the cube model stores, at the higher level, it stores the maximum barrels that are maximum barrel capacity per tank, and then it's storing at a more detailed level contract information by tank number, by contract type, and volumes and rates and things like that. And so the real value in the benefits here of this capacity planning model is the ability to answer questions like, are my tanks fully utilized? When are my contracts expiring and up for renewal? Who are my biggest customers? What kind of seasonality trends do we have? And the results of this feeds not only their financial model, so this will help feed revenue as well, because terminal storage fees are another source of revenue, but also it supports capital decisions around terminal expansion, right? If I've got contracts that are exceeding my capacity limits, do we need to start expanding? Do we need to add more storage tanks? How do we manage those capital decisions? So it's a very important model for a number of different reasons. Okay. While we're in the area of operations, let's leave energy for a moment and move over to real estate. Let's go to real estate investment trusts. So one of our clients, or actually a number of our clients, we actually do quite a bit of work in REITs. A number of our clients are fairly large public real estate investment trusts with several $billion in assets. This particular client, their assets can be a variety of types, shopping centers, malls, things like that. This particular client, their assets are Class A office space in most major cities, most of the major cities throughout the United States. So that's the industry we're in. And interestingly, they have a capacity problem as well. So their capacity problem relates to leases. They have to look at all of the different leases that they have across all of their different properties and across all of their different lessees, their customers, so they can do that kind of analysis. So that was a problem. They needed to analyze, they needed to model out leases out over their lifetime, or at least over a time horizon that is of interest to them, and their time horizon in the model is actually a 9-year time horizon. They're modeling out leases and they're planning for lease expirations and renewals. So when will these leases expire? When will they need to look at either renewals of those tenants, or will the tenants be no longer occupying the space and they'll have to find new tenants? They need to be able to identify which regions and buildings are expected to gain capacity so they can determine how that impacts their sales or their income, rental income, and how it will impact maintenance or upgrade plans. Because every once in a while you want to upgrade maybe a portion of a building, and you might need tenants out of the space in order to do those upgrades. They also want to, of course, be able to project what's their capacity and what's their rent for current and future years, and easily create capacity reports and growth trend reports to be able to support investor reporting and regulatory reporting, because they actually REITs have to do a lot of regulatory reporting, especially in the area of occupancy reporting. So this allows them to calculate occupancy. That's what the model does. So the solution imports information on leases from industry standard lease management systems, and it then models those leases and the rental income out, as I said, 9 years by tenant, by lease, and by building, and buildings roll into regions. And it calculates these occupancy rates and allows the analysis of the expirations and renewals that I was talking about. So in their case, what that allows a REIT to do is answer questions like, what is the current and anticipated capacity of a particular building? How much capacity do we have by state and region? Which leases do we expect to renew, and which do we think will end? What building will have a dip in capacity, making it an ideal time to do renovations? What buildings under renovation will enable us to increase future rates for future leases? So these are some of the examples of the kinds of questions they can now answer by having this kind of model. So that's sort of their lease analysis or capacity plan model, if you will. There are other requirements that real estate investment trusts have, and because we do so much work in that space, Revelwood actually has a specific instance of our BPM suite that I referred to earlier that is built out particularly for real estate investment trusts, and handles other models as well as the lease analysis, models like acquisition and disposition of properties, development, internal development of properties, construction costs, and all those kinds of things. Equity models that handle investor ownership, because when you have a REIT, you typically have a series of investors, and they have equity values and dividend payouts and things like that. And there's also a debt model that tracks sort of loans and lines of credit, which is very common in the REIT space, and manages all that and interest charges and things like that. So our REIT solution is actually more comprehensive. This use case is really meant to just talk about sort of the capacity planning aspect of it, so that affects operational decisions around expirations, renewals, and again, capital decision making as well. Okay, switch again. Now we're going to move to the demand side a little bit more, and we're going to talk about demand planning. Our client example in this case is a beverage company. In fact, it is a craft brewer, a large, well-known craft brewer. That picture looks pretty good right now, doesn't it? I could go for one of those, I got to tell you. But anyway, that's the perk of working at a brewery. Our folks, when they're there, they can have beer, which is great. After hours, by the way. Okay, so let's talk about that. So this large craft brewer sells beer through wholesalers, who then sell it through to retail outlets like bars and restaurants and stores and things like that. So let's talk a little bit about that demand planning requirement. So it's really a volume planning model, because they really need to be able to do all sorts of analytics and planning around volumes. They're looking at volumes across all their products, so the model ultimately ends up at the SKU level, and by wholesaler and by time. And one of the things they were trying to solve with the business problem is to help inform brewing operations on demand requirements. So it's not just to support revenue planning and do customer analytics by wholesaler, et cetera, but it's also to support, to help inform the brewing operations so they know what kind of demand is being projected out ahead of them. So the solution is a very detailed volume planning queue, which is by product, which is the different kinds of beer, by packaging unit, 6-pack, 12-pack, case, keg, et cetera, by wholesaler, which is really customer, by geography, and by time. And by the way, time is a little interesting in this kind of business. They have actually 3 types of time: fiscal year, sales year, and calendar year. And they're tracking shipments to wholesalers and depletions to retail outlets. That's what's called depletions, which is when it leaves the wholesaler and goes to the retail outlets. This whole thing is also very important because they have expirations on their beers, and those expired beers are returnable to the brewer, so they have to be really on top of this at a very granular level. and they have to be able to look at past trends and seasonality so that they can fairly accurately project what those shipments should be to the wholesalers, so they don't end up with a lot of waste. So they're able to input, so what's really interesting is they're able to input growth rates at the product level, so for any particular type of beer, at the product wholesaler specific level, and even at the product wholesaler and time level. So they have all sorts of levels of granularity at which they can input growth rates for their products, and that's how the model then projects out. It is also informed by historical sales. So we're feeding daily sales in, which is importing from a separate system, a separate sales track system that tracks sales, and that's feeding in on a daily basis. And so that daily information, also in the cube models, is able to really help support and inform the growth modeling that they're doing. And the other interesting thing is they can link a product's plan to another product. So if they're maybe introducing a new product and they think it's going to be very similar to another product they already have, they can sort of just link that plan to that other product, and immediately it will inherit all of the attributes and drivers for that other product. And then of course they apply current pricing to the projected growth so that they can support their revenue planning as well. So what this model allows them to do, besides the benefits you see here on the slide, are answer questions like, what is the highest selling product by wholesaler, by district, or by region? Based on last year's sale of a certain product, how much more should we brew this coming year? Who are my best and worst performing wholesalers? What products are growing in sales? What products have declined in sales? What is the distribution to depletion ratio by wholesaler? All of these kinds of interesting metrics that they can look at that may or may not even have anything to do with feeding a typical financial planning model. So we end up with volume planning, demand planning, and sales analysis are sort of the end result of that model. Okay, next use case. Now we're going to move a little bit away from sort of consumer products and food and beverage, and we're going to go to manufacturing. So this, elements of what we do here probably will touch all of you. This is a very comprehensive use of TM1 in a manufacturing environment. So we're going to spend a little bit more time on this than some of the others we've covered. So the industry here is building materials, specifically roofing materials, both residential and commercial. And this is one of the nation's largest manufacturers of roofing materials. As you can see from the picture, there are all different kinds of materials. The largest amount of which they produce is the one in the top middle there, which are shingles. But there are many different kinds of shingles and shingle products. They have about 30 manufacturing plants all over the country. Anyway, and we're going to get into now the specifics of not just one type of model, but many different models that support that manufacturing operation. So they had a need for comprehensive operational planning and analysis to support sales, logistics, manufacturing operations, and finance. So all these different areas of the company. So rather than describe it here in this slide, I have a diagram that I'm going to share with you that will help me sort of talk you through this very comprehensive solution. So all four of these departments or areas of the organization are impacted by this TM1 model solution. So in essence, it starts with a demand plan, which is really the sales plan box up top, which is by product and by region and by customer. And that's entered in by the sales department. So they're projecting out what they expect the demand to be. There's a separate pricing model also, which is by product and by region. And the reason why pricing is by region is because things like climate can impact the materials that are needed to construct these roofing materials. So it has to be sort of that level of granularity. Roofing materials are very large and heavy, big pallets of materials just for a single roof of a house. So they're shipped mostly by train, freight, or at least to start by train to get to more localized locations. Freight costs are very high. Shipping costs in general are high for them. So they try and manufacture as close to the sales region where the product's being sold as possible. So what they do is they have this allocator. We're still up in the sales area there. But we have this allocator module that allows them to enter production rates of the various products to each manufacturing plant. They do that by percentages. So they're entering these sort of driver percentages, and they're considering factors like the type of product, for example. Maybe there's a specialty product they're producing that can't be produced at certain plants. Only certain plants have been, designed or retrofitted to be able to, produce certain types of product. So they have to consider those things, and they sort of have this model that sort of inputs and allocates how these different products are going to be produced across the different manufacturing plants. So then we get into the logistics, and we get into this thing which is the capacity plan. And this is a centralized planning model. Each plant has multiple lines and shifts. So a capacity plan, the capacity plan looks at each plant's capacity based on the number of manufacturing lines in the plant, the amount of product, byproduct that we're able to manufacture per line per hour, the number of shifts per line, and the length of those shifts. So what the model does is it takes those allocated units and allocates those allocated percentages we talked about, and it allocates them based on units by product, by units of production across the different plants. And what it also does, which is really neat, is it automatically reallocates back in time if capacity is exceeded. So if the production volume for a certain plant is greater than the capacity of that plant to produce based on all of the lines and shifts that it runs, then the model will automatically go backwards in time to have that plant produce that volume earlier in time, maybe the prior week, prior month, something like that. So that's fine. That can sort of resolve that overcapacity problem or that undercapacity problem. But doing that requires holding inventory, right? So if I have to now manufacture product months in advance, I'm now holding lots of very big inventory. And that has costs associated with it. So the system allows them, in the reporting side, allows them to kind of show red flags if they're under capacity like that, and it's doing this automatic reallocation. And then optionally, they can go in and they can maybe they'll decide to add an additional shift to a particular line within that plant. Maybe they're only running 2 shifts a day and they want to run a 3rd shift overnight. Or maybe they will move some of that manufacturing to a different location because maybe they'll determine that it's actually cheaper to manufacture it in time at another location than to manufacture it in that same location months and months earlier and have all those inventory costs. Okay, so now we're at the plant level. So now we know how much product we'll be producing, so we can determine the amount of materials that are needed. So they have another model in TM1, all of this is in TM1, which does a bill of materials workup. So it includes every possible raw material that might go into the manufacturing of each product and the recipe, which is in essence the quantities of each that are required to produce each product. And that drives purchasing decisions. They have a similar model as well to that for labor and factory overhead. And then the combination of those 3 models allows us to do a variety of things, including coming up with a standard cost, which then goes and helps in accounting and for financial planning purposes. We already have pricing from above, so now we can calculate contribution margin. So then we're going to take all of that and we're going to allocate and feed into the main financial plan, or feed into the financial plan. That probably shouldn't say allocate at that point. Probably should say feed, the one in the plants box. It would feed into there. But before I leave plants, I want to go to the far left. There's a box that says shift analysis. What's really interesting about shift analysis is it's probably not the best name for it. They actually call it plant reporting system. And what it does is it looks at efficiencies by plant location, line, and down to the shift level. And they're capturing statistics by shift, and they're capturing those in real time. So right after the shift is over, the shift line manager will go into a screen right there, right on the shop floor, and enter in statistics into a form right there. It goes right into TM1 and has metrics like units produced, downtime, waste, those kinds of things. It's capturing all those metrics in real time, and so centralized, they can look at that on an intraday basis. So for example, if 2 of the same lines at 2 different locations have different production results for the same product, we have to ask ourselves, why is that? Is that a result of bad equipment? Is that a training issue? Is that a people problem? So they can answer those questions, and they can do it very, very rapidly because they're capturing all that information in real time. And then finally, we get to the finance box, and most of that is pretty typical. It's pretty traditional. You guys are used to, and what I talked about earlier. That's sort of, in essence, a lot of what our BPM suite does. So you have the compensation plan, which part of that is coming from labor up in the plant section, but then you have compensation for what we'll call overhead, the rest of the company, sales and marketing and SG&A basically. There's a whole corporate overhead model then. And there we use allocations, and actually in our suite we do have a pre-built allocations module that can be applied anywhere. And that allocations module allows you to allocate, across, whether it's by product or by region or by plan or however you want to do that. And then, that all supports, all that information coming in from both sides supports the whole financial plan, and they can do profitability analysis by plan, whatever level they want really. And there's also a capital plan there. But anyway, I've covered that one fairly deeply, so I'm going to move on. But that is, a very comprehensive use of TM1 for manufacturing. All of this is managed through TM1, or has been at one time or another, because this company has been using TM1 for a very long time. So anyway, to summarize that same use case, benefits, single comprehensive planning and reporting environment, demand plans, plant capacity, and linking the two to optimize production, real-time analysis of manufacturing operations, and the ability to support financial planning and profitability analysis. Okay, I'm going to cover one more use case today, and let's see, I will cover. Yeah, okay. Let's go ahead to one more demand supply example. You know what? If I can squeeze a couple in, I actually will. Let's see how much time I have left. See if I can in the next few minutes. So this one is a business services company. They have business support and consulting services serving their customers in the telecommunications industry. They have over 1,500 consultants worldwide, and so this is about a services operation, but it's also demand and supply planning. And in their case, they have all of these different consulting projects, and they need to understand the demand for those projects and then match that up with the supply of consultants to optimize utilization of those projects. So that's really what their business problem was. So they want to have as many consultants with the desirable skills as billable as possible to support those projects, while also having enough resources available to start new projects as needed. So the solution that we developed for this client involves a project planning cube, which is by project, and projects roll into regions, by role, which is very, very critical. That's where the skill sets are defined. By probability level, in other words, is this already a contractually committed project? Is this a highly likely but not yet committed project, etc. By time period, which is month, and by measure. And measure is, days, billing rates, and revenue dollars. And that is all, and a lot of the information that comes into that cube is fed from Oracle projects and from Salesforce.com. There's two examples. So they also have a supply cube, which is by person, essentially, by consultant, who are assigned to both a role in a region, and by time, which drives the number of days that are available and accounts for things like vacations and things like that. And that information is fed in from their HR area, from Oracle and SAP systems in HR. And the purpose of the model is to link those two, and they're linked by role, region, and time period. So a very important report that comes out of that is a gap analysis that allows them to, if you picture sort of a stacked bar, which is showing the demand by different commitment levels, and then you have a line that's overlaid on that, which is showing the supply, and they can look at that at a very high level or a very granular level, and they can see where the gaps are, and they can use those gaps to inform their decision making and answer questions like, do we have enough staff to take on this new project? Is it more profitable to use onshore resources or offshore resources? If a client project ends, what projects can use the newly available resources? Are we optimizing our people in the most profitable way, et cetera? So that's a interesting use case, again, for showing supply and demand type of activity. I'm going to mention one last one and just cover it in about 30 seconds. This is a nonprofit, and it's a consumer advocacy nonprofit organization, and they use TM1 for fundraising campaign activity. So basically, they are trying to measure and gauge the effectiveness of various fundraising campaigns. So they have a cube model that captures campaign-related details, and the expenses associated with the campaign. So a campaign might be a direct mail campaign or a telephone solicitation campaign or something online, and they can do this across geography and time. And what's interesting about it is they can also look at historical response rates to these campaigns and look at how many people gave. These are campaigns for contributions for fundraising. How many people gave, what their average yield was, and use that to help inform future decision-making around those campaigns, how to make those campaigns most effective. And one very interesting aspect of that model, by the way, is something called relative time, which at Revelwood we apply to a number of our models where it's appropriate, where you have an activity, in this case a campaign, that may have a projected launch date, but we might not know exactly what that launch date is, and that launch date could shift. And we want a way for the model to very easily be able to shift all of the inputs and all of the drivers around that particular campaign in this case, and to be able to shift it over time in a matter of seconds within the TM1 model. And we can do that for campaigns like this, but we also do that for different kinds of products that also have sort of launch dates, like maybe a software game or a movie or a book or something like that. Anyway, okay, so that is the last use case we're going to cover for today. So to sort of summarize, before I turn it back over to Jason, there are obviously many ways of using TM1 beyond traditional finance. I barely scratched the surface today, and we have lots more use cases that we couldn't even cover. I hope you found these use cases valuable and they sparked ideas for you. One thing I want you to keep in mind, please reach out to us if you want to share your own experiences, learn more about these use cases or others that Revelwood has developed, or find out anything more about TM1, about our BPM suite that I mentioned earlier, and other tools that we have, about our training, about our health checks, or other ways that we can help you. And with that, I'll thank you for your time, and I'm going to turn it back over to Jason for some brief Q&A.
Thank you very much, Ken. I really appreciate your time here, and I think that was a lot of good information overall. We are right up against the time period here, and we want to definitely take some questions. We have quite a few that have been submitted. If you have any additional questions, please do submit them quickly. I'm going to try to cherry pick a bit on some relevant ones to ask Ken and to bring forward. But overall, wanted to give a recap. We're hoping that these use cases not only show you specific examples, but also kind of get the wheels turning yourselves as far as maybe bits and pieces that can be applied to your own specific uses and implementations, and that can be expanded upon. And we cannot stress enough that these, any ideas you might have can be run by Revelwood, which is actually one of the questions that I was going to have right here. It says, I have my own ideas for use cases for TM1, but I'm not sure if they're really relevant or will work. Can I run them by Revelwood to find out? Ken, why don't you go ahead and just touch on that real quick?
Well, the basic answer is yes. I mean, we've got, as Jason mentioned earlier, we've got so much experience in so many different industries with so many different implementations of TM1. I mean, there are, well, I'll leave it at that. The simple answer is yes. Jason, I know you might have other questions, so I don't want to elaborate too much, but
sure,
just reach out to us. We can definitely talk to you about that.
So one thing that stood out for me as far as a really great question is, why are these use cases seen as atypical? If TM1 has all of these capabilities, why aren't more organizations utilizing it in these ways?
That's a great question. So I would say that, Yes, mostly. So traditionally, TM1 has been used mostly in finance, and even today, still, there are a lot more applications outside of finance, but it usually comes in the door through finance because that's the market that's always been sort of most appealing to a product like TM1. I think that a lot of that goes to the organization's ability to sort of, really just be aware of how TM1 might be used outside of finance. And I think a lot of organizations, they bring it in to solve a very specific and immediate need in basic FP&A and don't really necessarily take the steps to figure out how to expand that thinking into other areas and how it can be used in other areas. And sometimes it takes a little help and a little bit of experience. And there are many different partners in the partner channel of IBM that work with TM1, and some are very good, and some have lots of experience, and some don't have as much experience. So there are partners that have been using TM1 for a few years, and there are partners that have been using TM1 for many, many years, like us, for over 2 decades. So it just, by definition, by having so much exposure to TM1 through so many organizations, we're going to see all of those different kinds of opportunities, and we're going to be able to inspire our clients and help them see ways they can use it beyond TM1. So, I mean, that's part of it, just being exposed to those options, which hopefully we've been able to do a little bit here in this webcast, and might be able to do more for you if somebody wants to talk to us more about what we've done. So it's really getting that exposure and then driving a case for change within the organization to really explore and investigate and make the investment.
Awesome. I think we have time for one more question, and just to let you all know, your questions that you submitted, we can tell who submitted them, so if we don't get to your question, we'll definitely be following up with you directly afterwards to answer those questions. So just wanted one that was more universally applicable, and here's a good one. So it says, if I'm already utilizing TM1 in our Office of Finance, what does it take to introduce and implement other use cases such as these to the rest of my company? More licenses, more development? Is there anything I'm missing?
Well, we don't really know that until we assess it, right? So it may not require additional TM1 licenses if you can leverage the licenses you already have. But if it's opening it up to a new set of users, you're probably going to need more licenses for those additional users. So that's one consideration. There will be some development work to be done. If you've got the resources in-house to do it, you can do it. You shouldn't be able to do it yourselves. Or you could turn to a partner like us or anybody else and get some help for development. So it will depend. And some of it might be what you're looking to do might be an extension of your existing model and can leverage off of lots of what's already in that model, dimensions and things like that. Or it might be a completely separate application that's outside of your core finance app, and so that'll require a whole separate development effort. So it will vary and it will depend, but yes, it could involve any of those things.
Awesome. Well, thank you very much, Ken. Like I said, we're going to be respectful of everybody's time. We do have a bunch of questions that we will be following up with people directly. As I said, we can tell who submitted them. But thank you all for attending. We are very happy to be of resource to anyone and everyone. Do follow us on Twitter if that's your thing. And thank you very much. You've seen our contact information, and we'll be happy to help you in any way to further expand and evaluate these use cases or any others for your individual organization. So on behalf of Revelwood, Ken, and myself, thank you very much, and I hope you all have a great afternoon and a great rest of your week. Bye-bye.